Good morning, everyone. It is Wednesday,
Mike. What day is it, Mike?
February 12th, 2020. And it is almost noon. I got whooped out by my workout this morning. I did take some trades this morning that we're going to take a review of. And then we're going to see what else happened since yesterday. So without further ado, here's the intro, the disclaimer, the subscribe, hit the like button, all that jazz. So I'll see you inside. All right, we're back. So let's see where we stand. Right now we have a couple of trades. I doubled up on Euro USD. This is a trade that I believe is going to go far and long. And the reason for that is because Euro USD is at an all-time bottom. There's some other reasons as well. My take profit on this is in the stratosphere. It's up in here. So we're looking at roughly 140 pips, but as you're going to see, that can happen in a very short amount of time. Now the other reason why, so if we go out here and actually D1, you see the last time we were down here was in September, as I said yesterday, and the time before that we actually have to get out on weekly was around 2016. There's no reason why we should ever get down here again. Of course it can happen. I shouldn't say that it won't, but all signs and all roads do not lead to Rome, but they do lead 140 pips up on the chart. So I'm bullish on Euro USD. It's up and down here, but here's the thing. As you know, I tend to like to show you where the trading range is. And this is how I look at it. So you can look at it any way you want to, but this is how I look at it. And then let's try to determine what the right term is for right here. So we've had a sell-off, right? And we sold off into this area here. And in all honesty, the range it's a little bit small, but I'm going to keep this one. It really is, we sold in, it's actually lower, it's right here, right? So we actually sold into this level. And then we could increase this one a little bit. We'll just do this one. Talk about some other issues later. So we sold in here, and this is accumulation. So smart money was done driving the price down. The momentum was the last push from here to here. It's 40 pips. That's just pure momentum. You can see that because the lack of money in here, really the money is getting out down here, right? So there's a little push here, but then there's even less money in here, right? So that all matches up. So sold in here, and the drive down here is to create new supply. And so when you see this, you could call it selling climax because it's selling down to the bottom, or you could also call it buying climax because this is where your buying should be happening. So, but let's call it buying climax. And then when we had the reverse side of it, when we're at the top and we see those spikes up, we'll call them the selling climax. And the selling climax is exactly where you should be taking your positions. That would be the best entry. So down here is your best entry down here is your best entry. But this is the trading range. So what's happening here is it's breaking out, and a lot of people are familiar with the breakout strategies. So they will be looking for a breakout, confirmation candle. They got it, they're in, they're selling short. They're setting the stop loss right above here. We went down, they're calling the boss. They're pawning the car so they can buy a Ferrari on credit. And just to see this thing come up here and take them out, right? So now they're like, oh fuck, I wonder if McDonald's hiring. And then we get another drive here, and then people are looking at the spring effect or the bullish flag, whatever you want to call it, right? So you have a down pattern here. I can draw it, but I think everyone's familiar with this flag pattern. So they're sitting waiting for a spring or a coil, and that does happen in the sense that it comes outside the box, comes back up to the box, drops down, and drops further. So we're short again, and the stop losses are right here. Actually, it's right above here, right there. So we're down, same story again, it comes up, right? So this is market makers' way of creating supply and draining out so they can try to be the only player on the market. And then we drive the price back up and it kicks out the stop losses, and you see it's right above and right above the trading ring. Some people know how to draw this box, and they're putting the stop losses here, and they're out here. And then we short again. Guess who just jumped in? There's people up here that's jumping in. They're looking at this candle here, right? Got good, nice volume. There's absolutely nothing wrong with this trade. It's a great setup. It's a perfect, if you just know how to trade this stuff, right? So this is a great candle. Big volume is telling you stuff's going to go down. So you're in here. You have a little retracement of 3.6 pips. And then you got 31 pips. Absolutely perfect if you know what you're looking for. And you look left. This is the area where you should be looking at getting out. Take your profit and get the hell out, and wait for the opposite to happen. And it's happening, right? So this is not done yet, but this one, this is just a 1 hour candle. Look at the volume, look at the body, look at the spread. You'll have another drive up, another drive down, and then you'll have a runoff. All right, so 140 pips is what I'm banking on, looking for on this account. And I could go like this. And everyone that checked my video from yesterday know that I was short on pound New Zealand dollar. And I also know that that was my nemesis because I broke my rules and I was down all $100 on this account. So my equity was down $100, down $37. This is again accumulation, so there's no doubt that this one will go back up. But I need this one to spike a little bit, and I believe it will because you have stop losses below here. And when I look, where is this going to go? Well, I needed to drop another 120 pips. That's probably not going to happen, but it will probably drop another 60 pips. So I'm banking on that. This could obviously happen because New Zealand decided last night to keep their interest rate at 1%, which was what everyone expected. And if you were in here, like I said yesterday, I was short up in here. I took a wonderful 197 pips on this account, highlighted here. That was a nice one. This is where you wish you would have had a bigger position, but you could have gone the other way around. We've seen that happen as well. But 197 pips is nothing to sneeze at. $14. That's great on an account like this. So we're doing good. I'm looking like I'm on track to hit my 400 by the end of the week. This one I might eat this one if I can get it down another $10 or so, $10-15. I might just close it out and lick my wounds and be done with it, because I have reasons to believe that this one will go down. So I'm gonna try to clean this up a little bit so we can see where are we headed. All right, so where are we going? This is today's candle. So we had a higher high, higher low, higher high, higher low, higher high, higher low, lower high. All right, so first leg, second, third leg down here, fourth leg back up in here to this. I bet you we're gonna have this line being revisited from the bottom. We're gonna break through it and then it's gonna be revisited as well. So all right, so we broke through this one, we're up visiting that one, and I believe we're gonna drop further, right? So on daily again, lower high, lower low. This is the third leg about to be shaped up. That's usually the longer leg, and it's usually double the size of this first leg. It could end up being the size of that leg, so we'll have that leg is 421 pips. So the resistance is down here, so could be a repeat of first leg, and then fourth and fifth. Fifth would then be the biggest at this case. And we're up here in the trading channel, so we could see a total drop from down here, fifth leg, down here. And that would be normal because here's your liquidity again. So a lot of things have to happen though. So again, waiting for that one to play out. Spent enough time about that, but it was a good trade yesterday, 197 pips, and it took no time. So Euro USD could play out the same way. We could get 140 pips in no time, right? What else do we have? So we have 3 Euro USD trades, and that's all I'm waiting for. I need all of them to go in, and I'm just going to let that play out and not do much more. I wanted to show you the other reason why I believe we are going down. So Euro USD and the dollar index is being set up for tomorrow. So we don't have much left for today. That's going to drive the market much more. We have the Australia news tonight, and we have Canadian news tonight. So we can take a quick look and see what we see over here. If there's a setup for tonight that we want to get in on now. But as far as the dollar goes, we did come up here, 98.90, which I talked about. And then we had the little spike above that, which I also talked about yesterday. And now we have the opposite happening, right? So we broke down below this, we're retesting this, and I am expecting a drop down to 97.83 before we get the next climb. And that next climb on DXY is going to take the dollar index over 100. I believe we're going to go out to 2017 numbers. We're going to get up in here. So 100, 101. We could very well peak up in here. But that's where I believe we're headed. I could be wrong, so do your own research. But you can figure out what this candle, what the volume associated with this candle looks like. Now you don't get volume on dollar index, so but if you have paid attention to what I've been saying for the last 5 weeks, you would know what that candle says when it comes to volume. So that's it. So I expect this one to drop, and therefore I am bullish on Euro USD. You can be bullish on other pairs as well. USD yen, even though the dollar is going to fall, there's another thing that you ought to know. Because I was sitting on my large account with a very, very large position that was down 200 pips on a very, very large volume, and we're talking about a drawdown several thousands of dollars. And I was just trying to figure out what the hell is feeding and moving the yen. So I started reading about the economy in Japan, what drives the economy, what export import do they do and stuff like that. And then they have TANKAN index, which is done by Bank of Japan. And the TANKAN index in April of 2018 was at 12, and that got the, I think I'm quoting it right, that got the emperor involved and everything, because that was the lowest TANKAN index ever that they've had. Usually it's up towards 20. If I read the TANKAN report correct the other day, it was at 0 in December, which I don't believe had happened before. So we have another month. It's done every 3 months. We have another month before Bank of Japan does another update to the TANKAN index. So it's very interesting to see. But it looks like the yen has a very, very hard time in front of it. It has had a hard time ever since 2000, when the real estate collapsed and stuff like that. They never regained. But it's been a safe haven for money. You borrow from Japan, you stick it into a high interest country, maybe like New Zealand used to be at 2.5%, Australia and stuff like that. You take $1 billion, borrow from Japan, that you stick it into another country that has an interest rate of 2.5%, for instance, and you can figure out what happens there. But the TANKAN index is not looking too good. So the TANKAN index, just for anyone that may be interested, because if you're gonna do this for a living, you better start understanding what things drives the economy, and kind of understand a little bit about that. Although the market is fixed in the sense that someone drives the market, they do use the news to drive the market. So if we know that the TANKAN index is shit, and we also know that they import-export to China, and we also know that the borders kind of closed down now because of the coronavirus, you could imagine the financial impact to Japan's economy. It's probably taken a hit. So here's the TANKAN index. It's at Bank of Japan, so you can go there, you can look into it, and under statistics, and you have the TANKAN. This is a survey that they do every 3 months in different categories of the industry, and then they gather all that result and you can look at it. But that's kind of what drives Bank of Japan's behavior. So very interesting, a lot of reading, but you know, if this is what you want to do for a living, trading, you should learn this stuff. So anyway, that's it. We're 19 minutes into it. I'm going to cut, edit, and reverse and add some stuff, obviously. So again, if you enjoy these videos, hit the subscribe button if you haven't hit it. Hit the alert next to it so you can find out when I'm live next time, which I'm planning on Friday, February 14th, Valentine's. And also smash that like button and put a comment down there. If you have a question, if you're wondering something, it could be anything, like how do you get started with Forex? Can you start on $10 and all that kind of stuff? Whatever questions you have, if you're trying to find a way out of where you're at today, ask a question. You have nothing to lose. And remember, I'm showing you right now with this account that you can do this. Now it's slow, it's a small account, but we're still up. If we just look here, try and wrap it up, I'll promise I'm going to cut a whole lot of stuff out, all the passwords that I have and use. Save several minutes here. All right, so we're up $122.84. Divide that by the starting balance 5 weeks ago. We're up 48.7% in 5 weeks. You wouldn't get that return in a bank. So once you start hitting $1,000, things start accelerating a little bit. And if you just manage your trades and don't do stupid stuff that I did, then you can make this. And you just follow these videos. There are a lot of videos. I know there's a lot of videos, but I'm trying to show you how you can trade. This is how I trade. I've been doing it for years and years and years. And this is actually what I do for a living. This is my living. And you'd be surprised if I told you that I'm only looking for $500 a day. That's good for me. You have 300 trading days in Forex. So $500 a day, right, times 300 days, it's $150,000. I'm okay with that. It works. So, anyway, enough rambling, getting off the soapbox, cut, edit short, all that stuff. Smash the like button. See you tomorrow. Have a great day.